Hello, my name is Salma, and this is my video. In my video I am gonna talk about the digitalization of financial inclusion in Egypt and how it will affect the economy growth. In any economy, the size of the informal sector is a significant deterrent to inclusive financial and economic growth. While it's true that millions of people are dependent on the informal economy to earn a living in developing countries, these informal activities deprive governments of potential tax revenue to fund essential services such as health and education. They also provide a source of unfair competition for registered, tax-paying businesses. Egypt represents no exception. The informal sector of the country accounts for 40% of the gross domestic product. The informal economy employs around 10 million people in the country, half of which are occupations year-round. Around 85% of the country's small and medium-sized enterprises are informal. Only 12% of firms in Egypt have access to finance. According to World Bank statistics, Egypt's tax revenues fell from a high of 25% of the gross domestic product in 1977 to 12.5% of GDP in 2015. Financial inclusion allows all groups of society to use all financial services through official channels including bank accounts and savings, payment and transfer services, insurance services, financing and credit services. Financial inclusion also provides individuals with appropriate and equal opportunities to manage their savings in a sound and meaningful way. It plays a pivotal role in providing employment and mitigating the impact of potential economic and financial fluctuations. The higher percentage of individuals and institutions that fall under the umbrella of financial inclusion in a country, the more development of the economy of this country. Financial inclusion is one of the 17 most important Sustainable Development Goals approved by the United Nations, UN. According to these goals, the Egyptian state has announced its full commitment to achieving these goals by adopting Egypt's strategy, Egypt Vision 2030, which aims directly to confront the challenges of poverty, unemployment and development. There is a huge progress in Egypt towards achieving higher levels of financial inclusion and inclusive economy. With digital transformation, Egyptian government developed the Egyptian financial system in order to expand the use of financial services and facilities the access of all citizens to the financial product and services. As a result, achieving high level of financial inclusion which supports sustainable economic growth, poverty reduction and job opportunities enhancement. Central Bank of Egypt, CBE, acknowledged that digitization of payment systems and other financial services could reach financially excluded and underserved populations, with a range of financial services suited to their needs quickly, securely, transparently and cost-effectively. Egyptian government with cooperation with Central Bank of Egypt used technology in designing and delivering of financial product and services, this process called financial technology or FinTech. Innovative technology is used by fintech to deliver a wide range of financial products and services. It aims to create a consumer experience that is more convenient, more flexible and more quick. Fintech can democratize financial services for the masses by making financial services more widely available and lowering costs and barriers to access finance. In 2014, women in Egypt are more excluded from the financial system than men, with 12% fewer women on average having financial account, which is considerably above the global average for developing market. Only 27% of adult women versus 39% for men will have a financial account. There were a gender gap of 12 percentage points. With increased the using of mobile phones by women, women's access and agency over financial resources increased by digital finance. Mobile wallet is a payment tool which women can receive and send money via mobile devices. It acts as an entry point to financial services for unbanked women. Women can pay their bills or suppliers, take payments from their customers, store small savings in secure places cheaper, safer and easier by using mobile wallets. COVID-19 pandemic has changed our world forever, in a matter of months. What started as a global standstill is fast becoming a race to adapt as new data pours in, and we get a better vision of our new reality. With global productivity still recovering, we are facing an unprecedented economic downturn which will impact individuals and businesses' financial stability for months and even years to come. While short-term recovery plans will allow many to survive the fallout, employees and businesses will need a long-term outlook to thrive in the post-COVID landscape. For many individuals and enterprise, robust financial services will be a lifeline in this new normal. During the COVID-19 lockdowns, digital financial services are enabling governments to provide quick and secure financial support to hard-to-reach people and businesses. Companies providing digital financial services, fintech, are better placed to profit from this situation. Fintech needs to be prepared not only to accommodate this increased demand, but also to expand its enterprise IT infrastructure while, like everyone else, adapting to the new world. In Egypt, the corona pandemic crisis highlighted the importance of the country's tendency to support the implementation of financial inclusion policies and facilitation the electronic paying of citizen payments in cooperation with the institutions of country. COVID-19 crisis proved the insightful vision set by the Central Bank of Egypt, CBE, for digital transformation, and its importance in our time, as this strategy became, besides being a national goal, a necessity, pointing to the national economy as a shield to resist the current crisis, and the banking sector witnessed rates and amazing development in digital transformation and electronic banking during the recent period. With the support of the directives and instructions of the Central Bank of Egypt CBE regarding the transition to a cashless community that supports electronic and digital financial transactions to limit the spread of the COVID-19 virus and preserve the health of citizens, e-banking services usage has increased significantly in recent times. The financial inclusion allows all groups of society to use all financial services through official channels including bank accounts and savings, payment and transfer services, insurance services, financing and credit services, to avoid some people resorting to informal channels and means that are not subject to a minimum from supervision, which are relatively high prices, which leads to misuse of their financial and banking services needs. Financial inclusion also provides individuals with appropriate and equal opportunities to manage their savings in a sound and meaningful way. At the end of this video, it is important to know that developing the Egyptian financial system will raising the levels of financial penetration which will contribute to economic stability in the Egyptian market.